A Balasubramaniam, Chief Executive Officer of Birla Sun Life AMC, joins us. Bala, good morning. Thank you for joining us. Bala, I guess on street everyone is asking the same question. Is this leg of this high beta rally slightly overdone, or this high beta rally has some more shelf life?
Yeah, good morning, Nikunj. I think the last 3-4 months, I think we have seen a different kind of market, which largely is rewarding those who are in the better known sectors, especially coming from infrastructures and capital goods. And the entire rally has been again broken into two parts. One, something which has built huge amount of asset base, currently of course in the business of building it to the next levels. But those are the stocks which has now actually bounced back purely on the basis of the steps what these companies are taking with respect to sale of assets and looking at buyers and also getting benefit out of some regulatory changes that has been coming in. And second, of course, is mainly on the capital goods sectors, which are purely on the basis of expectation that is getting built up, that we as an economy, probably the next 2 to 3 years, upon having actually the stable government, will probably have a lot of investments coming forth. So in some sense, I think the capital goods sector is also coming back. Though they have been beaten down sectors, at the same time, one has to look at it from the point of view of not just only the earnings and their ability actually to participate in the future growth. And second is purely on the basis of the assets what they built in the last 3-4 years, especially during the downtime. Those assets what they built could also play a bigger role as we move forward. That's why I think the whole piece has to be looked at. But having said that, there is no doubt that the momentum is pretty good. And the participations coming from overseas investors continue to remain very, very high. And the domestic participations, which used to have largely on the selling side, that is now getting reduced. Even your own paper today has reported that life insurance corporations in India is moving away from selling actually to the buying. So these are some of the things which also keeps the overall sentiment intact with respect to the larger participation coming from the market.
So Bala, what is your sense amongst the banking pack? What is it that you are preferring? Is it a mix of PSUs as well as private banks, both wherein there is some visibility of the balance sheet getting lighter in terms of asset quality?
Yeah, I think interestingly, the banking as a sector is where we at Birla Sun Life Mutual Fund have got reasonably good successful track record in identifying the potential winners in the sectors. Having said that, I think the large proportion of the investments will continue to remain in the private sectors, which are relatively well run, which has got a large retail book, and the threat of NPAs coming and hitting them actually is very, very low. So they will continue to actually perform pretty good, despite the valuations of these companies or these stocks in this private sector space could relatively higher. Having said that, in the public sectors, I think we have to divide clearly between something which is reasonably good from the valuations point of view. At the same time, the NPAs which has been there largely in some of these banks have already been recognized in the books of accounts, and any economic recovery that we potentially could be seen, and some of the assets which has been booked, actually the non-performing assets, could also get sold in the market with respect to realizing the value of that investment what they have made. And that's why I think one has to look at clearly very selectively in the public sector space itself. I think one cannot ignore public sector space is actually something which is getting impacted because of the non-performing assets. We'll have to look at it from the point of view of what the kind of companies come under the non-performing side of the non-performing books of the accounts. And second is how those assets can be recovered and then sold. And third, some of these companies which have already gone into the CDR, how they can be revived in a scenario where the economic environment turns actually is positive in the next 2 to 3 years. And we'll have to look at from that angle. So we as a fund house have been actually extremely conscious about this fact, and try and actually pick the right stocks in the respective space. The other bigger space, which of course exists, is still in that financial risk space, is actually the non-banking financial risk companies who have been largely actually in the space of building the retail book, whether it is a home loan, whether it is loan against properties, or the auto loan space. They are continuing to actually expand their business largely through the retail book. So we'll have to look at it with the combination of three: for private sectors, and within that the old and private sectors, and public sectors within that well-run public sectors, and so on and so forth. And third is actually the NBFC space.
Bala, a key plank on which Indian markets have moved off late is liquidity. But at a time when the tapering quantum will increase, and if interest rates in US are poised to go higher, Do you think we cannot take liquidity for granted?
Yeah, I think, Nikunj, interestingly, we had just few days back our equity conclave first time for our channel partners. And we had a round of discussions with the external speakers as well as internal speakers. And one other point which came up, the same thing what you just exactly asked. I think clearly from the world point of view, what is reasonably emerging is that US tapering is real and it could probably continue. At the same time, there is an element of the emerging market, which is largely coming from the fact that China has been seeing a slowdown, and now is becoming more and more clear that Chinese economy will continue to struggle for some more period. So in this kind of scenario, the global allocation which normally comes in any emerging market, where does it come? Despite the fact that US tapering is real, and despite the fact that expectation of US interest rates going up is also remains, at the same time the overall liquidity, especially in the short run, is not going to vanish significantly, and that's being the case. The money has to flow into the emerging market as part of a normal allocation come from the global investors. And clearly what was emerging in that context is that India is of course reasonably poised well against the China and other emerging market from three single most factors, which is current account deficit. There has been a significant improvement, balance of payment is now getting better, and the fourth is fiscal deficit this year has been managed reasonably well, which essentially means that we have avoided the downgrades. And fourth, of course, the volatility which was the highest in Indian market, both in rupee as well as the market, both of them are reduced significantly. And because of these factors, there is a perceived feeling that mostly India will continue to get a lot of allocation from the overseas market, given the fact that fundamentals are getting better, and if it's going to be get added by more stability coming from the government election, which is of course likely in the month of June, if you probably see the outcome of the election is going to be more the direction of having a stable government, in all probability that US tapering will remain reality, but India will continue to see an inflow coming from overseas investors. So that is an outcome which is coming from some of the external speakers whom we had, who represents the large proportion of the FI investments in India, as well as they talk to actually the most of the global investors.